Okay, happy Friday, everybody. Happy Friday. Trading Non-Farm Payrolls live. Number 322. 322. No, I'm sorry. It's only 174, which is what, 14 and a half years? Holy smokes. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small. Stay humble, focus on the long term, and never risk money you cannot afford to lose. So how you doing? How you feeling, huh? Morning, Ronnie. RJ Nabisco. J-Dub. Well, Trump's got COVID. Holy smokes, did that kill all my trades? Oh, no. It's the unknown, what we call an exogenous shock. Holy smokes. So anyways, yeah, there you go. By the way, my name is Wayne McDonell. I'm a currency trader. I've been doing this for a very long time. So let me just put this into perspective. This webinar, Trading Non-Farm Payrolls Live, I have been doing with FXStreet every single month for 14 and a half years. I was a currency trader before I started this webinar. So, at least 14 and a half years I've been doing this. So, RJ, it's actually being uploaded right now. It's in the process, so it's probably there. Okay. So, yeah, so Felipe is like, hey, does this President of the United States has a deadly disease thing? Is that going to move the markets? Well, it's already moved the markets a bit. Will it move the stock market? Oh, yeah, I would imagine so once the stock market opens. So here's the agenda today. In 1 hour, we'll have non-farm payrolls, right? So we'll get that number. And then the second thing that's going to happen is at 9:30, we're going to have the stock market open. We're going to have that volatility. And then we're going to be done for the day. Throughout all those periods, I'm going to do my best to answer your questions about technical analysis, fundamental analysis, trader psychology, and anything else you want. Scalping, spot trading, market open trading, day trading, swing trading, position trading, carry trading. We can cover all of that. And then I'm going to go race BMW M3s at a racetrack. Okay. Thank you, Felipe. Yes. I don't know if you attended that webinar I did recently. I'm like, you don't say Trump, you don't say Obama, you say President Trump, President Obama, or Mr. President, or the President, right? So anyways, yeah. Cool. So anyways, yeah. So anyways, that's my agenda. So what do you want to start with? The BMW M3, or do you want to start with Trump having a deadly disease? I guess we can do that. So yes, as far as coverage today, how about all the dollar pairs, all the yen pairs, all the Swiss franc pairs? We can do some cross pairs. We can do gold. We can do oil. We can do Bitcoin. We can do exotics. Anything else? Oh, how about XRP? XRP. Okay, we can do that too. Any other requests? What would you like me to cover in the next 3 hours? It could be a pair, it could be a commodity, it could be a topic, it could be a trading strategy. What would you like me to discuss? Emerging markets, okay, we could do that. Faux show. I can cover my favorites are lira and rand and peso. Why increase debt in the United States? Yeah, well, the answer to that, Jimmy, is just the reserve currency. Think of it this way, Jim, because instead of the 2-hour lecture, let me do the 2-second lecture. In the United States, because of the reserve currency, our debt is priced in dollars. So if you can't afford your debt, just lower the value of the dollar until it's worthless. And then you pay back your debt, your worthless debt. If you're another country, let's say Great Britain, or a better example, let's say Turkey. and your debts are in US dollars, you can't just, create more currency, because what happens is it weakens your currency. So your debts are expensive, and you can't make your debts cheap. You just can't do it. So that's it. By the way, quite a few people are typing in private messages. This is the genius of WebEx, I guess. So you have to change, when you type in the chat, you have your choice of host and presenter, all attendees, all panelists, or the admin. Choose everyone. Yeah. And don't use Q&A like, so the software is so stupid, right? There's Q&A and there's chat. Yeah, don't use the Q&A. I'm not watching the Q&A. Okay. So yeah, so we can do South African Rand, for example. That's a good one. Turkish Lira, the government has ruined their currency, and it's now not even really traded on a global basis anymore because it's essentially worthless. So, but we can cover it. I still have the charts. We can look at South African Rand, which is now sort of the best logical carry. I also like Mexican peso. And if you're in my live groups, like one of the things we did recently was go to the website for the Central Bank of South Africa, look at the structure of their website, actually find some reports, download the information and read it, and then go to the Central Bank of Mexico's website, access some of their reports, right, download and read them, and then compare the two emerging market central banks to see which one, just seems more professional. Okay. I don't know any of those theories, sorry. Okay. Sri Lanka! Wonderful. So anyway, great. So we can do Rand, corn. Well, instead of corn, copper might be interesting. Copper's way down, huh? You've been watching copper? Copper is an interesting leading indicator. I don't have a chart here, but we can look into it if you wanted. Anything else? Best time frame, okay, I like that. Silver and gold, I can do both of those. What do you think of gold? What do you think of gold? What do you think? What do I think of gold? I like it a lot. I like gold. Give me some gold. Okay. Be careful with the questions. Ask smart questions. What do I think of it? Yeah. Yeah, that's what I think. So we should make sure you, right, that's not a good question, I guess is what I'm saying. All right, so now we do have to, by the way, thank you for all of that. I will do my best to cover that in the next 3 hours. In between all of that, I have to prepare you for the non-farm payrolls release, get the volatility of the non-farm payrolls release, and then we got to get ready for the stock market open and the volatility of Trump having COVID. So we got sort of a busy day in there, and so this is broken down into like 4/3 or 3/4. And so what we'll do is, I'll start some subjects and then we'll get serious about what's about to happen, and then I'll drift back once the volatility slows down. So I'll try to, pop and stop throughout the volatility of the day. So please be patient with me. So by the way, my name is Wayne McDonell. As you know, I've been trading currencies for a couple of decades now. I've been working with FXStreet for a couple of decades now. They've awarded my work with, Speaker of the Year, Best Blog, Best Webinar, Best Education, there's a couple of other things. So anyways, I'm very, very lucky to have such a strong relationship with FXStreet over all these years. So if you're unfamiliar with who I am, where have you been all these years? I have something like 5,000 videos associated with my work on YouTube. So that's pretty cool. So long story short is, if you like what I covered today, if you like my methodology, if you like how I speak, how I trade, how I teach, both technically and fundamentally, then and you want to benefit from all that sort of experience. Over the decades that I've been doing this, people say, "Hey Wayne, thanks for the training, but I need a book." Or, "Hey Wayne, thanks for the training, but I need live help." "Hey Wayne, thanks for the training, but I need video courses." "Hey Wayne, thanks for the training, but I need your chart templates." "Hey Wayne," all of this, right? Think about it. Over the years and 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 years, I've been doing this. So over all that time, I've created all those resources because that's what people asked for. That's how it was created. It was asked for, then it was created. So yes, I did write a book. It was called Strategic and Tactical Forex Trading. Guess what? The next question is, where do I find your book? Try Amazon.com, bro. Okay, Strategic and Tactical Forex Trading. The video training courses, of which there are somewhere between 35 and 50 hours of training videos. That's at FXBootcamp.com. And when you click Start Now and start the process, it actually gives you a coupon code for 76.4% discount because of COVID-19. In fact, the coupon code is COVID-19. So that's almost 80% off. Inside of FXBootcamp.com, I have a live trading group. And once you log in and sign up for the videos, it says, "Hey, by the way, if you want to join the live trading group, we meet once a week. We talk about all those things that you're trying to learn about, all the topics you're trying to fold together, whether it's technical analysis, fundamental analysis, all this kind of stuff. Like, how does it all come together? Multiple time frames, scalping and swing trading, day trading. Like, how does it all come together?" Well, we cover that every week in sort of like a mini mastermind group. So, and that it's not expensive either. So there's a lot of resources out there. My chart templates are available as well, metatraders.com. So anyways, I would start sort of like the center of the universe. I would start at fxbootcamp.com. That's where I'd start. Okay, fxbootcamp.com. If you need a broker, I work with tradersway.com. Try them. Fast execution speed, narrow spreads, wide swaps, world-class customer service. So again, another resource for you to have a broker that actually cares about your education level, because they want you to survive and thrive and trade successfully for years and years and years. So think about like even the mentality of a broker that thinks that way. Yes, and it is an ECN. You can have an ECN account. You can have a fixed spread account. Like if you're a scalper, that's important. You have the variable spread, right? But if you prefer ECN, really the difference is an ECN you pay commissions, and a variable spread you pay spread. It ends up probably being exactly the same thing, but one is a hard dollar fee and the other one's a soft dollar fee. So whatever, bro, like whatever you want, that's there. So try that, tradersway.com. Okay. So lots of resources. And then of course, thank you to FXStreet for being here for 20 years. 20 years. Think about it. So what an amazing resource. Like if you put this into context, when I first started trading Forex, there was nothing. This is what it all comes down to. There was nothing. There were no books on Forex. You know, Amazon.com had not been invented yet. Webinars had not been invented yet. YouTube had not been invented yet. Okay? Think about that. And I did not know any Forex traders. And the professional money managers I did know laughed at the idea of Forex as being a scam. And the second thing is they laughed at technical analysis as being stupid. And these were the professionals that looked at me and said, "Wayne, you are stupid. Forex is stupid. Technical analysis is stupid. You should quit. This is dumb. You're embarrassing yourself." And I had to fight through all of that knowing nothing, okay? Knowing nothing about technical analysis, nothing about fundamentals, nothing about trading, and had to learn all of that through all of that strife. So now when I say, "Oh, you can read my book, you can take my training courses, you can join my live group, you can download my chart templates, you can do," you know, and you have all these things at FXStreet, you have all of this plethora of knowledge. So you better like girl up and get this this thing called Forex under control because there's no excuses anymore. There's no excuse, right? Right? There's no excuse. You either pull all this together and get your trading under control and you get it successful and profitable, or you're failing the opportunity. You're not fulfilling your destiny. And compared to 20 years ago, you have a way better chance of success. So don't screw it up. Okay? Before this, I was a venture capitalist. And let me tell you, out of all the thousands of business plans I've read and all the millions and millions and millions of dollars I help invest into companies, this is by far the best thing. The best, by far, the best thing, the best business opportunity that I have ever seen, the purest form of capitalism I've ever seen in my entire life is trading Forex. Money is your product, money is your service. I buy and sell money for a living. Oh my gosh. So don't screw it up. You have lots of resources now. And if you prefer smashing your head into a brick wall over and over and over again, hoping that you can break through, why do you deprive yourself of your destiny? Like, you have all these resources. Why would you reject them? Doesn't make sense to me. Okay? So let's get on with it. First of all, I've had to lower my resolution by about 50% so that WebEx can handle my resolution, because you can't just share part of your screen. You have to share the whole screen, and it would blow your monitor out of the water. So I've had to lower it, and now I feel like I can't see anything. I don't have room to pull things up. There's this chats in the way. This is terrible as a presenter, but I'll try to get through it. Okay, I'm going to try to get through it. It's just things are in the way and I can't quite see. Okay, cool. So, and I got to move that over there. So anyways, if it looks awkward, that's what's going on. All right, so I got gold. Okay, gold. Let's start with gold. That chat's in a way again. Oh, crapo. How do you say that? Crapo. All right. Okay, so XAU, daily. What do we know here? Some of you are like, what do you think about gold? Yeah. I mean, what do I think? Okay. First of all, the question is, are you a bull and a bear on gold? So you should say, what is your bias on gold? Right? And not what I think about it. I think it's a thing. I think it exists. It's AU. More like, am I bullish on the outlook for the gold market? Do I think prices will be up by the end of the year? Right? Or the end of the day, even. That's a better question. And then more importantly, why? So that would be the first thing to think about. And I'm not going to answer that, but we can get to it. The second thing is, what do you when analyzing market conditions for gold, what have market conditions been like? And so, again, that's much different than having an opinion. Here we go. Over here. There's my dry tool. It's more like, without an opinion, if you're just analyzing statistically the gold market. So let me change this. I think you're having a hard time seeing that, and I'll make it a little fatter. Okay, right in here is where I'm looking, guys. Okay, can you see that? That middle line is the mean. Mean. And that means average. So over this period that we're measuring, which is here to where we are now, here to here, during this amount of time, when you look at the average, the price per candle, so what's the average here? Of course, where you are, right in the middle of that candle, and then the middle of this candle, the middle of this candle, the middle of this candle, middle of this candle, middle of this candle, middle of this candle. What are the averages? Add them all up, right? Divide by the period, the end period, and you get an average, and over time the averages change because you're adding more candles and you're dropping candles depending on how you're measuring things. And by doing that, you also get a slope of the average. Okay? So here's the average, and then the new average, add these up, and then add these three, and then add these four. And what's happening is you get an average of the average, okay? And so over time, we call this run over time, you can measure how much during that period does it fall or does it rise. And so what you do is you look at the rise over the run. Okay? Of course, if it's sloping down, you have a negative rise, that's all. So you have to look at it, okay? It's sort of statistics and calculus put together, because what you're looking at is where on this graph are you above this right axis, or are you to the left or to the right of this axis? Are you above or below this axis? And you're trying to figure things out, right? Okay? And so as you know, the algebra that's involved is, so you have the x and y axis, and y equals mx plus b. Okay? So you guys remember all this, right? So m is simply the rise over the run, which you're saying the slope. Here's your y, here's your x, and b is the intercept where they cross, right? So anyway, so looking at this statistically is the way to answer that question, by the way. What do I think of gold? Well, currently, we're at about the average price. So statistically speaking, which isn't necessarily technical analysis, but statistically speaking, since the beginning of August, we're at a fair price. It's not really bullish. It's not really bearish. I wouldn't call it neutral either. It just is. Is it a great buying opportunity? No, not really, not statistically. It's not like way ridiculously oversold. It's not like we're 2 standard deviations below the mean. We're not even 1 standard deviation below the mean or above the mean. In fact, we're about mean. This is about the right average price. Now, it's also incorporating the slope, and that's why this is important. Because basically we're saying this is a channel, okay? And if you're trading a channel, as you guys know, there's oversold conditions, there's overbought conditions, okay? And right now, looking at the slope over time of the average and how far price tends to deviate from that average, this is about right. What do I think about gold? Meh. It's meh. Can you see that? You see what I mean? Okay. What is gold? It's meh. It's about right. So looking at gold, where we are in the moment, if it's priced appropriately, you don't really have an amazing opportunity. Now, if you have a plan ahead and you say, I understand market conditions now, but for fundamental reasons, and this is off your chart type analysis, for fundamental reasons, you think by the end of the year, let's say, or by next year, gold will be higher than it is now. So now you have to say, this is where we are now, but for whatever reason, and maybe it's just a wild and crazy guess, but you think it'll be like this in the future. That's where the technical analysis comes in, but you have to have that fundamental bias first. And then you can start looking at technical analysis to say, this old trend here shall continue. It may continue soon, or it may not. But you're looking at it, let me try to change my color here. You're kind of looking at it like somewhere here in the future. Okay? Somewhere here in the future, you believe it might continue in the old direction. Okay, so this is now you either doing analysis and planning ahead or simply guessing, but guessing's fine too because you'll simply need to wait. Okay, so now if you take this average, right, y equals mx plus b, m being the slope, so you project that out into the future, you will see, regardless of this 2-month downtrend or this 2-year uptrend, we're priced about right, about appropriate. Okay. You see this? So does it have to go up? No, but could it? You can say, well, we're back into the range of a long-term trend. Okay, cool. So in that case, now you want to look at next week. Okay, and this is something we did 3 days ago, 4 days ago. Actually, it might have been Monday. On Monday, I had set a bullish long trade this way. Not that I'm predicting it will go up, but if you want it to go up, this would be the price that you would anticipate the support to hold and start basing your trades. Meaning, imagine now, if this is your long-term position that you think by the end of October will be higher, and maybe even higher in November and higher in December, then now that's long-term. We're looking at a daily chart now. Imagine now on a 15-minute chart, for the next 100 days, right, on a 15-minute chart over the next 100 days, all you're doing is setting up buying dips. On a 15-minute chart, on a 1-hour chart, on a 5-minute chart, it doesn't matter anymore, but you're never thinking down, you're never selling, you're always looking for higher highs and higher lows, higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, every 15-minute cycle, every daily cycle, every weekly cycle, whatever cycle you're trading, all of them you're set in buying dip mode. Now, not buying dips in a downtrend, okay? That's where poverty lives, okay? Not buying dips this way, but buying dips this way, okay? And that's why I have all this measured out. Your step one of this would be having your support. Step two would be a higher high, higher low. And once you got that, game on. This old market condition, so let me identify in yellow. This market condition will have been completed, and then the existing old market condition will be the one continuing. Okay? Okay, you see that? Is that helpful? This is a combination of statistical analysis, it's price action. There's definitely pivot points in play here, but in the context of standard deviation. Okay? Turn on, Simon. Well, Simon, go to FXBootcamp.com. That's a good place to start. So looking at the statistical analysis here, when you're looking at, regression analysis, a big part of regression is standard deviation. And so really, when you're looking at slopes of trends in a regression channel, what you're looking at is the average and the deviation from the average. How far does it tend to move away from the average, above or below? That's what standard deviation is. But you can also do that with pivot points. And instead of working on price, they work on standard deviation in a market. Okay? So like to get this slope that I just explained, this downward slope, what it's doing is it's looking at the highest highs, lowest lows, highest highs, lowest lows, and then the average. And it's only looking at price. So literally it's a scatter plot of prices. It doesn't care about candles and stuff. It's just closing prices, a whole bunch of closing prices. And that's where statistics come in. It can be voting patterns of people, and you just plot all this data, and then you pump out these these analyses. It's only looking at price. Now, the interesting thing is when you do pivots, whether they're daily, weekly, or monthly, it doesn't matter. What you're looking at is these pivots are based on the previous period. So again, if it's daily pivots, you look at what happened yesterday and try to use them to predict today a little bit better than you otherwise could. Or if this is this week's pivot points, it's based on last week's market conditions, so on and so forth, right? You're always looking at the previous period to predict the current period. And so this is the market. It's measuring market, what happened in the market. And you do the highest high plus the lowest low plus close, right? But the point is, it's also looking at, right, highest highs, lowest lows. It's looking at an average and how far price, the lowest low deviates from the average, how much the highest high deviates from the average. And look, for these pivots, it looks at the high of the period, the low of the period, and the close. And the close incorporates sentiment into the statistical analysis, right? Sentiment now. What was the market like when the market closed? Did it close bullishly? Did it close bearishly? Did it close neutral? That matters because it'll impact the near future. And that's what all of this analysis is it's trying to give you a picture of what the future might be. And so the interesting thing is that you get a weighted average. So you could just say high plus low divided by 2 and you get average, but instead you're doing high plus low plus close divided by 3, and you get the weighted average that incorporates sentiment, and you get things like these central pivots moving up a little bit, a lot, or dropping. Well, that's not actually true. This one's here. This is the drop. Okay? And lo and behold, sometimes these are important, right? See how you have a central pivot here, and then you have a central pivot here, and you have a central pivot here, you have a central pivot here, and way up here you have a central pivot, and then you have a central pivot, and then you're down. Notice how influential this analysis is. You can clearly see it stepping up, right? You're buying dips, and all of a sudden it doesn't rise anymore. And in fact, the next thing it does is it falls, and you'll see the central pivot actually drops down. Do you think that's relevant information? And if so, where are we now? So we're lower than we used to be. But what if the next set of pivots, which I'm already calculating, even though it's only the second day of the month, I'm already calculating November. I know, right? But what if November's central pivot point as we go through October ends up rising, and you find the November pivot point over here? Would that be statistically relevant to you? And I would argue it probably would. And you'd have your game on for bullishness again. Okay? Well, here right now, I believe the Trump getting COVID is going to overwhelm non-farm payrolls. But let me specifically answer your question. Should you have stops on your open positions before non-farm payrolls? You should always have stops on your positions, Mahir. And in particular, before a risk event, yes, absolutely for shizzle. Oh, faux show. Oh, for show. Yes. Felipe says, hey, I just wanted to say for everyone that don't have the templates, go download them. They're $5 and they're so damn accurate they even install for you. That is correct. That would be metatraders.com. Do you have to move to break even or maintain only weekly size? I mean, this is a risk management issue, so depends. Do you think your trades are going to have 1,000 pips profit? Okay. Are you up 500 pips now? Are you up 50 pips now? Are you up 5 pips now? Okay. So if you believe fundamentally you're going to make big money, then why would you be so afraid? Okay. You shouldn't trade afraid. Now you should have risk. So if your stop's already at break even, I wouldn't worry about it because you expect 1,000. If you're up 300 pips already, you should be fine. Although we have this big exogenous shock right now. Okay. Right. Inos or onos? Inos exogenous shock. We have this giant exogenous shock right now that will probably overwhelm things for a bit, or maybe a lot. And this really brings in some strange questions. What if Trump has COVID. What if he gets really sick? Like, what if in 10 days from now, he's on fibrillators or whatever you call it. What do you call it? Ventilators. What if he can't do another debate? Like it starts to be a political risk here. So yeah, it changes things, right? That's all I'm saying. It changes things, and that's not good. Not that it's like, oh, Biden's better or something, or Biden's not as good. That's not what I'm talking about. It's the impact on the political process of the largest economy in the world that's also the reserve currency. When the process is meddled up for whatever reason, but in particular the potential illness or death of a president, right? None of that says, oh my God, this is so good for investment. We should start making all these risky investments. We should start deploying capital. It actually freaks people out. And that is bad for the deployment of capital. So we have a real risk right now that the Japanese yen, the US dollar, and the Swiss franc gets unbelievably ripper strong because of the dire impact of the situation. Okay? So should you move your stop because of non-farm payrolls? Well, first of all, I don't know your trades. I don't know your positions. I don't know your outlook. I don't know what your plan was. But should you address the fact that we have a risk at 8:30? Yeah, you probably should. Is it break even? I don't know. That's for you to decide. But the other thing is that is most likely the smallest issue on the plate right now. I think we're going to find out more as the day goes on about the situation. You know, and it could have very much negative impact on our trades. So, for example, I had a lot of trades set up based on the assumption. Really, it's a bet if you think about it that way. I mean, I know I'm supposed to say I'm a coach or something, and I don't bet. Well, look, I have an educated bet going that macroeconomics are improving, that the outcome of the election will be positive either way, maybe not positive in the same way, but positive either way, and that sometime between now and election night, people will get more comfortable with sort of the likely outcome of the election, and we'll start to deploy the capital before the election. Of course, once we know who the next president or the outcome of the election, or at least we believe we know the outcome of the election, capital can be deployed again because we have strategies for such outcomes. All of that is now in jeopardy, and I lost a bunch of trades last night. I mean break even. But a lot of my trades got busted out yesterday because I woke up this morning and found out that the President of the United States has a deadly disease. Gone. Okay? And if the United States is getting worse and there's another COVID shutdown, will that impact the global economy? Will that impact macroeconomics? Will that impact the flow of money across borders? Yeah, it will. Much like having to shut down a bar will impact the flow of money to the bar owner and from the bar owner. Suddenly the bar isn't buying $20,000 worth of Bud Light. So Budweiser ain't making the same money, right? The waitress loses her job. If he shuts the bar down, no one's paying the electrical bill, no one's paying the mortgage or whatever, all these different things. He doesn't need the insurance anymore, and all the money stops flowing. Okay. By the way, people that are logging in and saying, what about gold? What about gold? I covered gold for probably 15 to 20 minutes at the beginning of this webinar, and you're logging in late, almost an hour late. So you'll have to watch the recording. Okay? That's that. All right. So we have news coming up, and let me take you through a normal scenario of how to set this up. Now, I have a couple of assumptions. Again, like we already know, I've been working with FXStreet for 20 years. Not quite 20 years, almost 20 years. And one of the things that I've done, besides covering the event every month for 14 and a half years, like just that, some of you have attended 100 of these. You know how to do this, okay? Also, I wrote a complete report on how to prepare and trade for this event. And then that led to an entire development of the FXStreet website into a resource center on how to prepare for and trade non-farm payrolls. So I'm assuming you've done your research. And I'm also assuming you're not logging in asking me to tell you what to do. Like, should I buy it? Should I buy it? Should I scalp it? Should I buy it? Do you see the numbers? Should I buy it? Should I scalp it? Dude, that's not what I'm about. But I will teach you how to trade it. But if that's what you do, by the way, you don't know how to trade. If that describes how you trade, it's 382 versus 381. What do I do? Does that mean good? Do I buy it? What do I do? If that's how you trade, you don't know how to trade. Okay? So, full stop. Stop. Stop trading like that. Stop thinking about that. Stop being small. Stop being amateur. Okay? I think I was pretty clear on that. I don't mean to be insulting, but I can be clear. All right, cool. So what we're trying to do now is a new scope. So here you got monthly pivots and weekly pivots. I suppose we don't need that right now. Let me ask you something. Should we be bullish or bearish in general? Okay. Well, right now, and a lot of this has been impacted over the last, bit of time. I got to keep my eyes on this. We're now stuck in here, which is actually very much neutral. Bears have already sold at high. Bulls have already bought at low. And now we don't really know what the outcome is. And then you can see over the last few hours, the volatility, we've had a high and a low and back up to the high and to the low and high, low, low, low. So we've really tightened up inside of this COVID news. I would assume that the President of the United States getting COVID would create dollar strength. and it would create yen strength, and it would create Swiss franc strength because it's a risk to our economic situation. Okay? Remember, we're trying to decide, will businesses invest money? Will consumers consume more? Okay? Now, if you lose your job because COVID-19 kicks in for wave number 2 and you lose your job, consumption should go down. If not immediately, once you run out of your savings. And if you're that type of person, you probably don't have a lot of savings. So we got to be careful. Okay? And if the economy gets shut down because of a complicated political process or some other complication, same thing, if businesses don't invest, if businesses, by investing, like businesses don't consume stuff, they invest, right? They don't spend money, they invest money. So if they hold on to that money, or if they're not making money because of the economy and they have to lay people off, then obviously they're not going to invest, they're going to hoard. So right now, I think there's a lot where I don't think the president getting COVID would give the green light for people to go out and buy that big screen TV. And I don't think businesses are going to say, you know what, we don't even have to worry about the political cycle, all that kind of stuff. Well, Trump got COVID-19, so let's invest $20 billion in Vietnam, right? Whoa. Money is going to be held until after the election or after whatever, or after COVID. And so that all of that is more complications. So under these fundamental and macroeconomic scenarios, I would think, and it comes down to the time frame, right, of dollar strength, Swiss franc strength, Japanese yen strength. Although yesterday I was hoping for this, but things have changed yesterday. Okay? Yesterday you were Dorothy in Kansas, with NTM and Toto, and now you're surrounded by a bunch of munchkins and some nasty witch. Things have changed. Things have changed. Toto, I don't think we're in Kansas anymore. I'm going to fire up tradethenews.com. Venusian doesn't have it. Well, I wouldn't say it's not irrelevant, it's overshadowed. So we still need to know the economic situation from last month. Are things worse or the same, or are they getting better? That does matter, but we already know the trend. So it's more like, is there a radical change in trend? Okay. So let's go to a smaller time frame. You know what? Let's not do this chart. Let's do this chart. Okay, so first of all, I need to get out of this trade, right? So whatever. Yeah, it's just, so I'll put that there. By the way, for me, break even is -3. The worst trade, well, the second worst trade in the world is a break-even trade. The absolute worst trade is a +1. +1 pips, +2 pips. The absolute worst trade. When you see someone there like, I have 90% winners, and you look at their trades and they have all these plus ones, you should laugh at them and then walk out the door. You say, wow, you're like mentally deranged. You have no clue. But lots of negative threes makes tons and tons and tons and tons of sense. But anyways, so what we're looking at here is typically there's, so here's what the market's doing now, let's say. And then NFP comes out and it does this, okay, on a 1 minute chart. In that case, what we're going to want to look for is buy a dip and extend it. If it goes like this and NFP brings it down, pull back, sell it.
8.2%. 0.2% month, 4.8%. Hours remain at 34.6 according to the surveys, and labor force participation expected 61.9%. And non-farm payrolls expected 875,000, unemployment expected 8.2%.
So what we're talking about here is a high volatility event-driven strategy. All you're doing is trading the volatility, guys. This is not a fundamental trade. It's barely a technical trade. Okay? It's a scalp. So as I just showed you, if you get a giant green candle, you're going to buy a dip and throw it long. And you're not allowed to risk more than like 20 pips.
$7.9%.
Wow, nice.
Expected non-farm payrolls at 661,000, below the 875,000 expectation.
Good headline number.
7.9% at 661,000. Average weekly hours of 34.7 is 1/10 higher than expected. Labor force participation dropping to 61.4%, below the 61.9% expectation. Private payrolls 877,000. It's not in line with expectation. Manufacturing payrolls 66,000, above the 35,000 expected, and non-farm payrolls revised higher to 1.49 million from 1.37 million. Private payrolls revised slightly lower in the back month. Early earnings in the prior month revised down 1/10 month-over-month and year-over-year.
It's not a good candle. I guess you have to decide, are you a buyer? I mean, it's not a good candle. Okay. So right now there's a slight break up, which is fine. So are you going to buy a dip here? The cool thing is your stop only has to be below there, so it's within tolerance. It's not a lot of pips. Okay. Okay. Remember, it's a scalp. Okay. Remember, it's a scalp. You have to decide. That might have been your opportunity. So, like, for example, if you did buy it, I'm not saying to do it, but what you're risking here is like you're risking this much. Okay. And it's dangerous because we don't have a breakout, but what I'm trying to tell you is the plan, if you're trading this type of trade, is this, and there's nothing more to it than that. Just some volatility. It's not a big deal. Okay? So like typically what you would look for is support and resistance. You'd look for key psych levels. You'd look for key pivots. And there's just not a lot going on right now. So you're stuck in the middle. Really, your true support is way down here. Oh, didn't mean to do that. Let me delete this. Your true support, this is what I needed. Your true support one is here. Your second real support is down here. Okay? And you'll see, so that means sort of like your real trades were like Wednesday and Thursday. So a little scalp here is very irrelevant in the scheme of things. So that's why it's a tiny little trade based on volatility. And if it continues, it continues. If it doesn't, it doesn't. And that's that. So really what we're looking at is nothing has happened this week. Okay, so the real information that you should be looking at here is this. 1700, you see this? Based on everything that's happened this week, and that definition is here's the lowest low, here's the highest high, and the close, nothing has changed. So next week's central pivot is 1 pip higher than this week's, and that could change by the end of the day, by the way. Right? This can go up or down. I mean, now it's exactly the same, 1703. So there is zero trend right now based on market. There's zero market trend. Remember, these pivot points are calculated in the market. So this is weekly. Okay? So next week's high, okay, next week's high right here is actually lower than this week's high. Why? Because we didn't even get remotely close to the target. Okay? So the target's been pulled in. Same thing on the bear side, the target's way below. You can't even see it. Now you can see it because it's pulling things in. So what is the math doing?
Jobs data, decline in federal government jobs, reflecting fewer temporary census workers.
What we're looking at is there's the mean average, which I already covered. It's a weighted mean, which includes the sentiment. So we already covered that earlier. But what this is also telling you is the standard deviation from the weighted mean, okay, has declined. The highest high and the lowest lows were less than it was last week. So this week, what's happening is less and less is happening. You see that? Less and less is happening. So the market conditions are not favorable. And so typically, like if you're in a trend, how about this? What trend exists right now for central pivots? Well, there's a central pivot at this price, a central pivot at this price, a central pivot at this price, okay? And then a central pivot that statistically hasn't really changed that much. So I guess you could look at it two different ways. A bull might look at that and say, well, it should have been down here, but now it's up here. So maybe this is the catalyst for a bull next week. Now their target needs to be closer, but maybe that's a good thing. Not down is the beginning of up. Okay, I could buy that. But I think you'd already want to be bearish on the dollar for whatever reason. Or maybe even bullish on euro. I don't know if that's possible. But you might be thinking this next, right? But with, like I said, the new information is COVID, right? And I would assume dollar strength.
I'm not seeing much of a reaction in the markets to the data. The S&P futures remain down about 1.4%. Bond markets you see holding on to a modest bid along the Treasury curve.
So let's go here, for example.
Is at up 9 cents, or about 0.1%, and gold futures are fractionally lower.
All right, so let's take a look at this. I would assume yen strength, dollar strength, and Swiss franc strength. We don't quite have it yet, although there's these scenarios. Oops, let's make that pink. Make that pink. There's these scenarios here where there might be a change, right? So one thing you might want to look for today and next week is this idea. So if the stock market opens in the United States down to the downside, I think Swiss franc's going to go up, dollar's going to go up, and yen. And these are indices that I created. So this is Swiss franc against all these currencies. This is the US dollar versus all these currencies. This is the Japanese yen versus all these currencies. So these are not indices that I'm pulling data from some other place. This is gathering it from my charts. Okay? This is gathering it from the charts and so I'm creating my own indices. So I don't know if there is a Kiwi dollar indices that you can go to on Google. So I create them. Okay? So in a risk-off world, yen would fall, by the way. Okay? Okay?
I'm seeing a report out of New York Times, sources saying President Trump's virus case is mild so far with cold-like symptoms. Coming from New York Times, not directly from anyone at the White House.
That was worthless. All right, cool. All right, so anyways, that's how we'd look at it. I would assume by the end of today, yen strength, dollar strength, Swiss franc strength. Does anybody have a question about why I would assume that? If not, then I can move on to other topics. Well, Felipe, the question here is, how relevant is Trump's COVID illness? If it's not relevant, then yeah, you just go back onto the stuff that you planned yesterday, the day before that, the day before that. One of the things I said maybe 5 months ago, the Fed said something. And I said, because of what I just saw at the Federal Reserve Bank of the United States of America, because of the Fed policy, I will now be a bear on the US dollar for the next 5 years or more unless something changes. And I said specifically, it would be COVID related. Okay? The President of the United States of America getting COVID and the First Lady getting COVID, is that plausibly the unless something changes category? Yeah, that would be an exogenous shock. I thought it would, I mean, that was always plausible, right? But I thought it would have more to do with, the states shutting down again, right? And I know they're kind of slowly shutting down, and we're seeing this in the UK and in other places as well, where bars are shut, restaurants are being closed down, that kind of stuff. People are not allowed to gather. You can't go to weddings. You can't go to graduations. And all that kills economic activity. So if things are going backwards instead of improving, if it looks like doom and gloom 2.0, then yeah, that's the if something changes scenario. Because remember, none of this is really my opinion on good or bad. That's not the point, okay? It's the economics. So that degree behind me, that's an economics degree. So I'm looking at this from an economic point of view. If economic conditions worsen, it impacts the flow of money. So it's not just local economic impact, but global economic impact. If the Chinese economy slows down because the American economy slows down and they buy less stuff from China, then China will buy less iron ore and coal from Australia. China will buy less oil from let's say Canada, maybe less soybeans from Brazil, maybe less everything. Less consumption, less investment out of China. So obviously you'd see GDP in China fall, and that impacts all the stuff they buy. Now, China is blessed with an incredible amount of natural resources. So here's China. So China has everything that it needs. It has iron ore, it has coal, it has timber, it has food and natural resources and energy, and it's got everything. It just doesn't have enough. So when things are good, it has to look to the rest of the world to supply its deficit. So like it has enough iron ore and coal, it just can't get it out of the ground fast enough because they're making steel faster than they can mine the resources. So they have to look to Australia. Or China needs the energy because all the factories are booming, but they want clean coal. They've made a decision to have clean coal because the coal that China has in Manchuria is, well, it's dirty coal. So they're like, wow, we need less dirty coal energy and we need more clean coal. So they're like, oh, well, we're just going to get from Australia. Yeah, it's a little expensive and all that, but we'll take it. Well, hey, man, if factories are being shut down, they're like, forget the clean coal nonsense, right? So that's what we're looking at. We're looking at the macro impact of all of this. Because if money does not cross a border, it doesn't impact anything. So if the U.S. economy gets shut down, but nothing in global trade is impacted, then nothing changes as far as the U.S. dollar is concerned. So I want you to look at it this way. I guess I'll get my drawing tool out. GDP is equal to C plus I plus G plus exports minus imports. So ultimately, the only thing that matters as Forex traders is exports minus imports. But what makes people make these decisions about exports and imports is C plus I plus G. Consumption. Okay? If you stop buying crap from Walmart, then we're going to import less. So like literally, you lose your job at Applebee's, you lose your waitress job, you lose your dishwasher job at Applebee's, you're not going to go to Walmart and for $398 buy a 65-inch 4K TV to put in your apartment. Which is crazy, the standard of living in America, right? You can be dirt poor and you can live in a nasty apartment, but you got a 65-inch 4K TV and you Netflix like crazy. You don't pay $200 a month for cable. You pay, I don't even know what Netflix is. You pay some fee and now you get Netflix in 4K. Okay? So consumption matters. Consumption, right, matters for imports. Investment, for example, could impact exports. And government spending is government spending. If they spend more, they can impact consumption on the short run. If they change policies, they can impact investment in the long run. So you have short run and you have long run, and they can impact it by adding to, they rarely decrease their government spending, but they could increase government spending. And that's what we're talking about right now. The Democrats yesterday proposed a $2.2 trillion stimulus package, which we know is stupid because there's no way that was going to pass. But it's politics, so they're playing politics. Like, oh, we'll give you a stimulus. Let's just make it 2.2. No way. So, right. So the Republican, whatever. I said 9 months ago it was going to be settled at 1.6. Back when they were talking about 800 billion, I was saying, oh, it's going to be 1.6. So we'll see how close they get. But all of this is related to your imports and exports. Okay? So if the money doesn't cross a border, then Forex won't change. Yeah, you know, KG, I was younger 14 years ago. Okay? You see what I mean? Joshua, ask a better question than that. Tell me your bias on silver and give me a specific question. Don't say what about silver. That doesn't even give me a question. Yeah. No, like, think about it. Like, what are you actually asking me? You say, well, I'm a bull on silver, and I see that we are at a psychological level of support, but it's been a downtrend for a while. Is this a place where we can get a bullish resumption of trend? I mean, I don't know. Like, actually ask me a question. Take the time to type it out. And I'll be happy to give you the best answer I possibly can, right? Yeah, it's shiny. No, it tarnishes. Like what? Yeah, like yeah, you got it. Like you got an opportunity to ask me a question. Ask me a good question. How do you decide on exits on trend like volatility trade today? That's just a scalp. So a scalp is a scalp is a scalp. So that's you buy it at support and you get out at the next resistance. That's all that is. That's a high volatility event driven strategy. It's so tiny and meaningless. But that's easy. You buy it at support and you get out at resistance. What exits tend to have to do with the strategy behind the trade plan. So there are trades like yesterday I discussed pound dollar and pound yen trades that are a minimum 1,000 pips. And by the way, a lot of new traders and new gurus, they don't even know how to count pips properly. So they say 1,000 pips, I made like $100 on a mini lot. No, that's 100 pips. You're counting the wrong fractional pip. You're counting the wrong thing, bro. Yeah, 1,000 pips means one mini lot turns into $1,000. Because if you're up 100 pips, you made $100 because it's $1 per pip on euro dollar. So you would have to have 10x to get your 1,000 pips, right? You'd have to turn your internal rate of return is you risk $100 to make 1,000, right? So that means you're buying at, let's say I'll make up a number. You're buying at 120 and it went all the way to 130. It went up 10 cents is 1,000 pips. Okay, 10 pennies is 1,000 pips. So we're looking at these things. So when you have a plan like that, you have to have fundamentals behind you. You have to have long-term trend, technical analysis, like things like trend analysis behind you. And then that would impact how much stop you should have, and then how you adjust your stop over the time, whether it's to remove risk or lock in reward, right? So if you thought you were going to make 1,000 pips, or not even thought, you were planning to make 1,000 pips, you wouldn't have a 22 pip stop. You're like, well, it's worth 1,000, but I'm going to risk nothing. I'm going to risk 22 cents. I'm going to risk $22 on the $1,000 trade. You're like, no, that doesn't make sense, right? So all these things, your trade plan impacts what you do next, what you thought of in the very beginning. Okay? Even though the actual techniques of how you enter a trade is pretty much the same whether you're trading on a 5-minute chart or a 4-hour chart, it tends to be about the same, but the logic and the mentality behind it impacts your behavior. Okay? Okay? Yeah, Felipe, that's just not what I do. I don't have time for that. By the way, people are still sending me private messages. Please change the settings on your WebEx and make sure you're posting publicly. Okay. Cool. Yeah, thank you. Felipe says, what has made the pound strong? It's actually a decline in bears. How do I know this? How do I know pound is going up, but it has more to do with less bears? How do I know such a thing? How could I even know that? Yeah, I studied the Commitment of Traders report. So the COT data comes out today. I think it's at 4. So let's open up a new one here, a new chart. Okay. CFTC.gov, I think. Let me just type that in. Yeah, CFTC.gov. Okay. And they give you a report. Where did they put it? Over the years, they've changed this a lot. News and events, press releases, statements, no. Industry oversight, no. Market data, probably. There we go. Commitment of traders. Okay. So you could read this whole thing or I can explain it. Okay. Here's what they do. Back in World War II, the government would walk into the market and say, you must produce this, you cannot produce that. Things like, they needed food and other such staples to support the troops in the war effort. And instead of making cars, he made tanks or something, right? Okay, cool. But what happened was you had imbalances in the market, and this became dangerous at times. And the government realized they actually need to know what is being produced, and then therefore, if there are market imbalances that were dangerous, maybe the government could step in and rebalance somehow. So the CFTC, the Commodity Futures Trading Commission, has requirements for those in the business. And they say if you are a large speculator in the futures market, you must report all your large positions to the government. So I think it's on Tuesdays, it's calculated, right? The positions of these large speculative investors report their positions to the government. They add it up, and because it's the government, it takes them 3 or 4 days to add. And then on Fridays, it's all released. Okay? The number of speculative bets in the futures market. So they do this for financial products that are, like newer, like the S&P 500, but they do this for wheat and soybean meal and all that kind of stuff, right? So it's futures contracts in the United States. And because of that, we also know all these futures are traded over an exchange. So let's think of it this way. We're gathering a lot of intelligence here. All large speculative investors are required to report their positioning in the futures market. How many contracts are you long? How many contracts are you short? Morning, Maida. By the way, Maida, I got your email. I got it. It was late last night, and then today I'm going racing BMWs and stuff. You're very, very much on my mind, and you always have a place to be. So you're not out. You're not out of the Cool Kids Club or anything like that. I understand. Okay. All right. So So what do we know now? We know the total number of contracts, and we know the total number of speculative positions. And then to entice people, they realize some of these positions may not actually be speculative. And there's an imbalance, but maybe there's a reason for the imbalance. What's the reason? Well, someone might actually be hedging a cash position. They're not speculative at all. They're in the real market, and they're buying insurance through these financial products called futures contracts. That's what it was all about in the beginning. So the government said, all right, cool beans. We need to figure this out. All right, so not only if you have a large position in the futures market, you'll report it, but if you're a bona fide hedger, you will let us know. And then people are like, we don't have to tell you crap, government. Like, why do we have to tell you our reasoning behind our futures contracts? Why do we have to tell you if it's speculative or not speculative? Why do we have to tell you if we're a speculator or a hedger? Like, what's none of your damn business, government. So the government says, well, if you're a bona fide hedger, we know you're not trying to make money, but you're just offsetting losses or wins and gains in the other market. You're actually just trying to lock in a price. So how about this? You won't have to pay taxes if you're a bona fide hedger. And they're like, oh, snap. Okay, we'll report. If you register as a bona fide hedger, you will not have to pay taxes. And so now you get a plethora of reporting. So what have we learned now? We now have the total number of open futures contracts, long and short, by bona fide hedgers, and the total number of contracts open, long and short, by bona fide speculators they don't own the underlying market, they're just trying to make money. And this is the kicker, we also know the total number of of futures contracts traded and open through the exchange. And why is that information important? Well, you have total number of futures contracts open, total, right? Minus bona fide hedging contracts that are open, minus speculative contracts open, equals whatever's left over. And what's left over? Not bona fide hedgers, not bona fide speculators, right? And we're talking large institutional investors. So if you have total number of contracts minus the institutional hedgers, minus the institutional speculators, you have everything left over, and that's dumb money, you and me, small traders, speculators, trading futures contracts through an exchange. So now if I say, oh, well, the the pound strength isn't necessarily bulls buying, but the first wave of bears exiting, how did I get that information? Well, first of all, I'm only looking at traders on American exchanges. So is it everyone in the world? No, no. And is it the spot Forex cash market? No, that's not that either. But according to futures contracts trading on exchanges by institutional investors that are speculators, there's some buying. At least my data is a week old, so today I'll get new data at 4 p.m. You can download this, okay? But we will find out how many people are actually buying it, which is new open contracts opened, right? And we can look at the total number of contracts closed. We can look at the total number of bearish contracts open and closed. And then we can look at the net, which is the difference between the number of new bulls in the market, or total bulls in the market, the total of bears in the market. What's the difference between the two, and what was the change week over week? And you look back in the trend of weeks, months, and years, and you can say, oh, snap, that's relevant information. Okay? You see that? So that could be interesting because it may tell you whether, if, let's say nobody's buying it, let's say it's just a massive profit taking by bears, and pound goes up and up and up. Right now it's not massive, but let's say it's just dramatic. 50% of all bears get out of the bearish trade. And you get giant green candles for 2, 3, 4, 5 weeks. I've seen euro dollar go up for 9 weeks straight and nobody was buying it. That shows you how big the institutional investors were, right? So imagine now like we had something similar. 50% of all bears got out of the market, but nobody bought. Well, you'd still get the pound dollar going up, okay? But it also shows you that no one's actually buying the pound. So what's the logical next conclusion? Well, whoever sold it and made a ton of money is waiting to sell it again. And at what price would they sell it? Is it a key monthly pivot? Is it a key weekly pivot? Is it a key psychological level? Is it a key like Bank of England meeting date? Is it a Fed date? What is the next catalyst for the resumption of the downtrend, for all those bears to return to the market? And if you can get that right, you're not chasing green candles because, you know, oh, look at me, green candle. You're like a dog chasing a squirrel, right? Instead, you're like, oh, man, there's nobody buying this. This is going up. So this is the weakest up move I can imagine. So you're sitting around waiting. And then all of a sudden you see the bear candle, let's say bearish engulfing daily candle, and now you're selling every rally like a mad person, just firing for effect. So you get this down, up, sell, boom, 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 trade, down, up, sell, boom, boom, trade, down, up, sell, trade, right? And you're just locked in because you know that it's still a bearish market despite hours, days, weeks, and even months of up. Because you've done the hardcore research, you know the green candle is not buying. It's bears getting out or getting stopped out. Yeah, I know. Good stuff, right? This is where I say on YouTube, would you click the like button, please? Click the like button and subscribe, please. Yeah. So anyways, that's simpleton stuff. You should already be doing all of that. So this comes out at 4 p.m. today. And yeah. Isn't that nice? You had all this information and you didn't know it. Imagine all the things you might be missing in your trading. You didn't know that? So maybe you want to read this, huh? This is the methodology, or you can just go with it. There you go. There, you can get it emailed to you. So 10 or 15 years ago, I used to have to download the Excel spreadsheet. Can you imagine how hard this used to be? Now you get it easy. It's just handed to you on a silver platter. Don't screw this up, guys. I mean, again, imagine 20 years ago, I had to go to the website, download the Excel spreadsheet, and spend hours looking at all the numbers. And let me tell you, it's not a pretty report. And now you get this knowledge just handed to you. Oh, you should do this. And look, and you can get some nice charts that explain everything very easy. This was so complicated 10, 15, 20 years ago. Yeah. All right, so we're about 20 minutes to the stock market open, and that is going to be interesting. So what would you like me to cover in the next 20 minutes before the stock market opens? By the way, look at the Japanese yen strengthening. Told you so. By the way, every time I say exogenous shock, you have to do a shot of tequila. Ah. You really want to know my opinion on S&P 500? Down. Next. Very complicated question. Yeah. What would you like me to cover in the next 20 minutes before the stock market opens? How can I help you? I'm here to serve. I aim to please. How do we calculate long-term trends? I got a great answer for that. All right, so let's pick Aussie. Okay. First thing, you need to learn macroeconomics and fundamental analysis. News is not fundamental analysis. News are data points. That's the first thing. So how do you calculate long-term trends? It's trends in the data points. So let's say non-farm payrolls. It's not the number that came up. It's the trend in non-farm payrolls, and it's the deviation from non-farm payrolls that is somewhat important. What's truly important, and the real prize that you got to keep your eyes on, is not non-farm payrolls per se. It's the trend in non-farm payrolls that impacts the policy and the policy response created by the Fed because of the trend or change in trend of the data sets of non-farm payrolls. It's everything to do with the central policy and nothing to do with CPI, PPI, PCE, ADP, NFP, all this stuff. They're data sets, right? The housing data, the stock market, it's all just data sets. You take this giant, complicated data set and you put it together, and you get some sort of opinion. Okay? The aggregate opinion could be things are bad right now. Okay? Or things are good right now. Now you might say bad means weak and good means strong, and no, you're not right. You're incorrect there. That's way oversimplified. So what you need to look at is, okay, what kind of data points is the Fed looking at, or whatever your central bank is? What are they looking at? What's their interpretation of their data? What is their objective? What tools do they have to meet their objective? And if a change in policy is required, what would that change likely to be? And why would they do it? Is it to increase exports or decrease inflation? For example, if we're talking about Australia, what the Reserve Bank of Australia does will have exactly the opposite consequence on the value of the Aussie dollar than if the Fed did exactly the same thing. Now, Australia is primarily an exporting country. The United States imports and exports massive amounts. Not primarily an exporter, they import even more than they export. But they export more than almost any other country in the world. They just import even more. That's how big the economy is. Now, Australia is in the business of selling stuff like beef, wheat, coal, iron ore, diamonds, et cetera, to the good people of China. So they have a very specific desire in mind, an outcome in mind for their central policy, central banking policy. They have to deal with inflation, but they also want to have a healthy economy. And so they know what objective they would have to get the result they need, okay? And when you understand that process, what's the RBA thinking? How are they interpreting the data sets? What would they like to have? What would they like the numbers to be as far as the economic conditions? What policy would they carry out? Like what strategy would they have to meet those objectives? And how will that impact the value of the Aussie dollar? And it's beautiful stuff. Oh my God. That's how you create the long-term trends. That's how you calculate long-term trends first and foremost. Okay? Why is the Aussie dollar weak? Why has it been weak for the month of October, September, and now still weak in October? Why is the Aussie dollar weak? The wonderful thing about the Aussie dollar is the Reserve Bank of Australia, if you know them like it, has a personality. The style and personality of the RBA going back 20 years, so there's always been different people at the institution, but the institution of itself has a personality. Okay? It's sort of like Canadian hockey versus American hockey versus Russian hockey, or Swedish hockey, or Norwegian hockey, or Czech hockey. They all have different styles, even though there's no one dictating it. They all have their own styles. Well, same thing with the central bank. Now the RBA comes out and they're like, yeah, we're taking this sucker down. No, and sometimes they'll tell you, yeah, we're at 75, it's worth 65. Oh my God, seriously? Yeah. So that understanding these processes. So for example, what were interest rates when we were here? What were interest rates in Australia on the first day of September? Come on, guys, type it fast. Thank you. Matrix is right. 0.25. What are interest rates now? What are interest rates now in Australia? Howard says the right thing, but it's a trick question. Wrong. Yes, you're right. It is 0.25. It's wrong. Here's why. Because I know you're smart money and not dumb money, you read the RBA meeting minutes. And you actually pay attention to the conversations the members of the Reserve Bank of Australia have at their meetings while they prepare and analyze, let's say, analyze all this economic data, CPI, PPI, they don't have PCE, but import-export data, GDP, all these calculations, inflation, retail sales, consumption, factory capacity and utilization statistics. That's what the RBA is looking at. And then they talk amongst each other and they go, oh, did you see all that? What should we do? What do you think about it? And they're like, that's disconcerting. And in the last RBA meeting minutes, they said, maybe we drop this from an all-time low of 0.25. Maybe we need to drop it to 0.1. Maybe that's what we should do. That's it. That's it right there. If you miss that, you're not a professional trader. That's what a professional does, is the homework. They're saying they are open-minded and may need to now, especially after, if the United States is now under threat, their economy's under threat, because now imagine, now everyone's got to shut down now, right? Oh my God. So what 2.0 is probably here now. Trump was the tipping point where we got to shut all our shit down for another 6 months. That's going to kill the economy. And if that's true, oh my God, dollar's going to be strong. Now you say, well, whoa, 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 whoa. Wayne, you just said everything could get bad and everything gets shut down. Why would the dollar strengthen? That's bad. The dollar would weaken, right? Wrong. And that's another thing I got to fix. So, by the way, if all of this stuff is like, this is the stuff you want to know, FXBootcamp.com, you need to sign up right now. I know it sounds like a sales pitch, but it's actually like, stop fighting me, stop having the filter and the negativity or whatever. Just do it. Get on board, man. Just get to the next level. Why waste another year walking in circles? You just get going. You got to know this stuff. I mean, you got to be right here. I know you're right here, but you got to be right here. Okay? You just do it. Just move forward, get past, oh my God, well, he's trying to sell me something. Just get past that, bro. Just move on. Just do it. Okay? So that is the first and foremost part of the analyzing of the trend. That's where the trends are born. Then the next part is technical analysis. Okay? And that's actually that's easier. So let's put this, let's clean this up because you might say, oh my God, that's so confusing, right? Let's clean this up even further. Let's do this one. Okay? Trend analysis. Okay? Here's an interesting, easy tool. Rana, I got your email too. I think that's your account though. So we need to dive into that. I'm sorry, I didn't have time last night. You got to understand, like, as soon as I dropped the webinar yesterday, I had to like run. I grabbed food off the counter, jumped into a car and was out. Like 5 minutes after my webinar yesterday, boom, like I'm gone, right? Like I gave 102% yesterday or like every day. And just so it's gone. And then I came back and it was the middle of the night, right? And so, and then like as soon as I'm done this webinar, I'm not joking, I'm running out the door, jumping in my Beamer and zipping out, and I'm going to go race some BMW M3s at the Atlanta Motor Speedway. Like, I'm out of here. But I think it's your membership. Okay, so if there's a problem with that, we need to figure that out. So stay with me, okay? Okay. All right. So I apologize for that if it's a system problem. If not, we got to fix your whatever. We'll get it, right? Rana, I've known you for what, 15 years, so we'll get it fixed, okay? But please be patient with me. All right. Here's one way of doing it. Okay? The question is, how do I analyze long-term trends? How about that? See how easy that was? Is that down or up? The only decision you have to make is how large is your data set? This goes from the March low. What if you're doing from the most recent lowest low on this time frame? So you can say, well, the lowest low previous to where we are now was this low. So you measure from this time from that time to this time. What does this tell you? Y equals MX plus B. M, you guys remember? Rise over run. This is actually math, right? Like literally, rise divided by run is what M equals. So you have to calculate how much does this market rise over time? See, over this period, how much did it rise? So if we count this like days, over this amount of days, how much did price rise? And then what's the average in the rise over run as you keep adding more candles? You get a slope. Y equals MX plus B, M is equal slope. Calculate slope by rise over run. So look at your data set. How long is your run and how far did it rise over that period and what's the average there? So now you get your here, okay, B is your intercept, X and Y are the axes, right? So you're looking at that. So if you're taking this low and this high and this high and this low. Now it's actually calculating this low, so the slope, this has changed. What you're calculating is what is the trend and what is the range. What is the standard deviation of the highs and lows from this? Now, right, so you could look at that and say, well, statistically speaking, this is bullish. In fact, statistically speaking, just based on what you're measuring, this market at that exact price is 95% oversold. Wait, actually, this might be 68% oversold. That's only, so anyway, so the problem with this is you have to manually change it every time. So I don't like that, so I like efficiency. So I do something like this now, and I create my own pivot points based on not the market. Remember I explained how you measure last period's market, the high plus the low plus the close divided by 3 gives you a weighted moving average. Then how far is the highest high from the average? How far is the lowest low from the average? Create that as a standard deviation. And then what's 2 standard deviations above and below the mean? And then what the, right? I'm just telling you pivot points. Well, what if you did the same thing, but not for market, but for price? When I do it this way, it says, ooh, the market's neutral and potentially turning bearish. And it updates in real time. And what this is also telling you is the lowest part of this is 95% oversold. See, the other one I think was actually 1 standard deviation. So 2 standard deviations is 95%. 1 standard deviation is 68%. Kind of smells like a Fibonacci number, right? So right now we know this was 95% oversold. What we want to look at is the change of the slope. So these are going to move if it rolls down. If it starts making lower lows and lower highs, you'll know you'll have a negative rise over a run. Okay? And that'll change the slope. Now, you may look at that and say, well, the other one was more candles. And that's your decision-making process. And it's always going to be that in statistics. So the thing with statistics, if you don't like your outcome, just change the data set. You're like, that's too neutral. I want to have more time. How about 155 days instead of 55 days? So now it's got to do the calculation. And it takes time. It's actually calculating. It's a lot of math, actually. Boom. Okay. So if you're measuring that from the March low, check this out. This low is 68% oversold. Okay. Now here's the problem with technical analysis. In this case, statistical analysis. The only thing we're analyzing here is what has already happened. So how do we predict the future? How do we know whether we want to be a bull or a bear? I'll give you a hint. I already told you. Fundamentals, thank you. Go right back. And what is fundamentals news? The Aussie jobs report? Is the Aussie jobs report going to reverse this? No. It's the Reserve Bank of Australia's change in policy to address concerns in the trend in Aussie jobs, or Aussie housing, or Aussie inflation, or Aussie import-export data, or Aussie whatever, you see? And when you can anticipate that, so like, why did we suddenly go from, we haven't been oversold since March. Why? What happened? Oh, the RBA talked about cutting interest rates from an all-time low to an all-time lower. Done. Chris says, FX Bootcamp won't allow me to sign up. Why? Okay, I got to get back to the market. The market's about to open, so let's get ready. So there's a private message. So Chris says he can't sign up.
Invitation to the virus.
My guess, Chris, is 30% of the people in this webinar are already members of FX Bootcamp. So let's figure out why you can't sign up. Okay, stock market opening. And this could be yen strength, dollar strength, Swissy strength. So let's just maybe see. I can't with this one window. It's so difficult. Let me bring up my indices. Okay. Once again, lots of people are sending me private messages. Don't send me private messages, please.
Nigerian oil union saying that Chevron workers are on strike. Charlie Victor X-ray.
So I'm dropping this from 4-hour analysis to 1-hour analysis to really get the change. Because if you know, on the 4-hour, things have bottomed out and we're looking for a change of direction. So I'm doing it on the smaller time frame. Okay. So I would say over the last several hours, yen did get strong. Swissy got weak, which is interesting. And dollar is moderately strong. But we're looking at the open of the stock market, the dollar spiking and the yen spiking. So get ready for that. Okay, so let's just look at, I guess we have to look at all dollar pairs, right? So let's just do that. All these, I think we're going to come down. So let's drop it. 5-minute chart, 5-minute chart, 5-minute chart, just so we can really keep an eye on it. 5-minute chart and 5-minute chart. I'm going to get rid of CAD because I think that's going to confuse a bunch of people. And I'm going to get rid of Swissy. That's going to confuse people. So let's just get rid of that and that and that. So we got Aussie, and I guess we should add pound is what I should have done. Shoot. So add pound dollar. And I want to move this to, what should we do this?
Pelosi on stimulus talk says that she's not taking the path of least resistance on stimulus. And the U.S. Supreme Court says they've accepted a case that potentially weaken the Voting Rights Act. They'll hear it after the election. Supreme Court also saying that they'll hear the FCC and broadcasters' arguments on easing ownership caps.
So 1 hour, 5 minutes. All right, let's get there. So 5 minutes, 5 minutes, 5 minutes, 5 minutes. So we're looking for congruency. They should all be sloping down if they're sort of equal value. Okay. They should all be going down, or they should all be going up, or there's a difference. So for example, if you see euro dollar, if you believe it's sloping down, and Kiwi dollar is sloping down, and pound dollar is sloping down, but Aussie dollar is sloping up, if that's how you interpret that, then the US dollar is strong, but the Aussie dollar is even stronger. And that's called relative strength. And seeing the difference between, one of these versus the other three is very, very important, not only because you're astute, but now you can translate that into a trade. Okay? So if we're looking for dollar strength, this will be moving down on the stock market open, and it did open a couple of minutes ago. So if it opens red, 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 risk off, risk off, risk off, then the US dollar is going to gain strength. And all of these are going to drop. Right now, we don't have that, so that's important information. In particular, on the long run, it may not be important information in the short run, because this could be down a half an hour from now. It could be down an hour from now, like hardcore. So what you could be doing is you make a decision. First and foremost, that is what you need to be doing. You can say, okay, today, based on my assumption of Trump sick risk off, then now you are only looking to sell. You may have a rule for engagement today. See, the dollar's on the denominator of all these pairs. That's why I got rid of things like USD CAD, because the dollar's on the numerator and that gets messy. So you're only selling these. Now, you don't know if you'll get the opportunities, but at least you've made the decision and you know exactly what you want to do before you do it. And now you're looking at psych levels, pivot points, so on and so forth. Okay? But you got to be hardcore focused. What are you going to do today? And of course, when do you want to stop doing that? Well, a higher high would do that. So as long as you're below 66.50, you're a bear. Well, we're at 66.25. Is this a good sell now? You're at the midpoint. I mean, now it's decision-making time. Do you want to sell Aussie dollar? No. Why? It's the strongest of all of these. Why would you want to do that? Okay? But you have to have clarity of thought and clarity of intent. What do you want to do? Don't tell me you're waiting for the MACD to tell you what to do.
Down 42 and the NASDAQ composite down 195.
Down. Dollar should be strong.
The VIX is trading up 6% at 28.52. Gold futures are down $11 or 0.6%.
Okay. Let's see a little red. I've seen fire and I've seen rain. Saw dollar trends that thought would never end. Oh, the indicator you see here, like doing the price action pivot points, that's proprietary. It doesn't have a name. No, risk off. Dollar strength is risk off. Dollar strength is indication of bad. Yeah, okay. Well, we're looking at 5-minute charts. So these are not decision-making charts. So you're not looking at this going, oh, well, I want to buy. No. You've made a decision either off the charts because of like just you think the president being sick is bad. Okay. And you just make a decision on that. Or you believe this is long-term down and whatever. But it's some sort of decision you made not on these charts. So what I'm trying to clarify is short-term market conditions at the open of a market, and your only decision is, should you sell now or should you not sell now? And I look at all this like, I don't know if you're going to sell now, okay? But I wouldn't sell Aussie dollar. Why? Because of current market conditions. Okay? Because this one is actually positive rise over run, negative rise over run, negative rise over run, negative rise over run. So this is like pulling trigger that we're looking at here. Okay? 68% overbought, 95% overbought. Right now we're at the mean, we're at the average price. So every pip above the average price is a little overbought. The more overbought, the better the opportunity, right? Anthony got gold, huh? Good job. In this case, I mean, the real answer is how many candles do you count? That's, I mean, that is a decision you need to make. There isn't a right answer, because if you don't get the results you want, like any other statistician, you just change your data set until you get the answer you want. That's the problem with statistics, right? What do they say? 68% of all statistical analysis is wrong. That's statistic, right? So I put on 55.
Outcome in the EU-UK talks to be excluded. So that be prepared for any outcome.
Okay. What do you think? Sell time? Huh? Sell time? Six, 67.3% all of are made up. Yeah, yeah. Yeah, that's great. That's perfect. What's the other one? If you put 10 analysts in a room, you'll get 11 opinions, something like that. Or how about the guys that are on TV, right? Predicted 11 of the last 8 stock market crashes. All right, so Kiwi dollar is 68% overbought. The euro dollar is 68% overbought. Look how precise it is, guys. Look how precise. Amazing, huh? See, I can't see it because the stupid chat's in the way. Oh my God, this WebEx is terrible. All right. So now I can't see pound dollar, but I'll look at euro dollar. Actually, I've done something like that, Chris. Not that extreme. I think I was in Dubai. There's some pretty cool spas in Dubai, by the way. There was one where after like a long massage, they wrap you in a heavy, warm blanket, almost hot, and your whole core is wrapped in this heavy, hot blanket, and you've already been rubbed around, right? So your core is just scorching, and then they put ice on your hands and your feet and your forehead, and it just throws your electrical system through the loop. It's really strange. You go soon. Okay. Check the stock market again. Need feel redeemed for all I've sinned against. This is all I've ever knew of love. So here's the other interesting thing, guys. The other piece of news is the stimulus package. So let me add this here. If the government comes together and invests 500 billion, 800 billion, 1 trillion, 1.2 trillion, 1.5 trillion, 1.8 trillion, 20, whatever the number is. These big numbers will weaken the US dollar. Not because they're printing more per se, and I don't think that's actually how the government does it. That's not really what's happening. So the government borrows money, they don't print money. Okay, no, the Treasury prints money, but the Fed creates money. So it's all very complicated. But if the government borrows money and implements it into the economy, well, if the economy had a balance sheet, well, your assets went up and so did your liabilities. So nothing actually changed. However, this is money that did not exist in the economy before in such a way, like it's changed hands. And so where's my drawing tool? I can't even see it anymore. Here we go. So like, for example, I don't know how to think about it. So let's think about it together. You have GDP is equal to C plus I plus G. Okay, let's just focus on that, but plus exports and imports. So what we're talking about now is G goes up with the desire to increase C. Okay. So if that occurs,
so New York 56.1, up from 42.9 prior.
If this occurs, there's sort of like the amount of money. So the government borrows money to increase consumption, but it doesn't change money supply. But it takes the money out of the hands of the government and it puts it in the hands or the government. So people invest into the government, and the government invests into consumption. So where do the consumers consume? They import more. Okay? When they import more TVs from South Korea, okay, TVs come to America and US dollars go out. So now, of course, you have to convert your US dollars to South Korean won, which is fine, but now the amount of money in the global economy, it's sitting out there in the interbanking system, has gone up, and as supply goes up, the value goes down. So we're sending money out of America, we're exporting the dollar, and we're importing TVs from South Korea. So if the government can borrow money from investors, and then the government gives the money to consumers, and consumers consume things from outside our borders, then we're exporting dollars and importing TVs. And then as the quantity of dollars, so now you got to do it this way. So as the quantity of dollars, okay, as the quantity 1, 2, 3, 4, 5, as the quantity of dollars increases, the value 1, 2, 3, 4, 5 should decrease. So you take a look at this. So this is the amount of dollars in the interbanking system globally as a consequence of the government stimulus. So here's the demand, okay, and then the supply of money, okay? It's a fixed sum. So let's say there's 2.5 whatever a quadrillion US dollars, right? And so because the government borrows the money, gives it to consumers, and consumers buy more stuff from overseas, we export dollars, and so therefore the amount of dollars in the interbanking system increases. You move from quantity, this is the amount of dollars in the interbanking system, to let's say this. Okay? So now you have quantity 1 in the interbanking system now to quantity 2. And if you look now at the equilibrium price, here's the old equilibrium. When we're at 2.5, the purchasing power of a dollar was 3 whatever, right? And now things have changed. Now we're at a new equilibrium point. And we're at Q2 now. The quantity of money is now not 2.5, but 4 in the interbanking system globally. And now it only buys you 1.5. So therefore, the value of the dollar is down by 50%. In this case, I don't care about the percentage. The point is, I want you to understand that the government stimulus increased the quantity of money globally as money leaves the United States and goes to other countries, increasing the quantity in the interbanking system, therefore lowering the value. And of course, people do this. They buy TVs, they buy BMWs when things are good. So a weak dollar is a good thing. The dollar weakens when things are good, which is hard for a lot of people to grasp. But now reverse this whole thing. COVID, without a stimulus, COVID would reverse this whole thing. If you lose your job, you're not buying a TV. You're not buying your TV, right? That ain't happening. Or, right? So the behavioral part really impacts things. So COVID-19 would probably shift the quantity in the interbanking system down. For example, billionaires in Malaysia might be negatively impacted by the economy, and they need to get their money out of risky investments and put it in a safe investment. And they might say,
I want Barrett now reportedly testing negative for COVID.
Oh my God, we're going to do this all day now. Anyways, so they might say, well, I need to put it in a safe place, and in that situation, buying a U.S. Treasury or a U.S. corporate bond or the U.S. stock market, whatever, most likely a Treasury, that would be the safest place to put the money. So what happens is they need to now buy U.S. dollars from the interbanking system, and then with that, buy government treasuries. Well, if they're removing from the interbanking system and giving it to the bond dealers in the United States, then there is now less money in the interbanking system. Why? Because things are bad. Things are bad. There's less quantity because people from all around the world, institutions all around the world, other governments all around the world are trying to buy U.S. dollars to buy U.S. government treasuries. The quantity of those U.S. dollars in the interbanking system falls. Demand increases, and the value goes up when things are bad. So Hans says, why are things going up now? We're on a 5-minute chart. What we're talking about now is a much longer term point of view. So like I said, you said, why are these going up right now? I'm actually saying in an hour, this could be way, way down. By the end of the day, it could be way, way down. By next week, it could be way, 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 way down. So when I'm announcing to you, okay, it's now 68% overbought, and it's now 68% overbought, maybe that's a time to wake up and say, well, maybe this is the time to sell. And you already have a negative rise over run if you look at the trend that we have based on statistical analysis. And again, to explain all what the stats are showing you, just to make sure we all know, let me clear this out. Okay, this is two standard deviations from above the mean, 1 standard deviation above the mean, 1 standard deviation below the mean, 2 standard deviations below the mean. Another way of saying it is 95% oversold, 68% oversold, 68% overbought, 95% overbought. So typically this would be considered, if you're a believer in this trend on this time frame, which is only a 5-minute chart, which is a trigger chart, red zone is a sell zone, green zone is a buy zone. Now, to be clear, as a buyer, I want to see the slope up. So if you force me, you're like, Wayne, you have to buy one of these 3. Which one would I buy? The one sloping up. Okay? You see what I mean? Yeah, if I was forced to buy one of these things, my only choice would be buying the Aussie versus the dollar on this time frame. I'm not analyzing long-term trends. I'm not analyzing fundamental analysis. These are 5-minute charts. This is for pulling trigger. So if you said, well, you have to pull the trigger on, you have to buy one of these things. You're like, let's say you're my boss and you're like, Wayne, I need you to buy one of these. Which one would you buy? Well, there's two ways of looking at this. One, I can only buy the one that's trending up. Well, I don't buy downtrends. Okay? Broke people buy downtrends. I only buy uptrends. And the second thing is at what price? I prefer to buy it when it's oversold. This is a dangerous place to buy. I only buy low. So right now, this is sell zones, and this is not a buy zone. So I could conceivably sell this. I could conceivably sell this, but I cannot conceivably buy this. So now I have to wait on a lousy, stinking, no good 5-minute chart for a setup. Yeah, that's all right. I'm patient. What do you mean by stand by and watch? No, you should trade. You should be making money. Your job is to identify opportunities and take them. So what do you mean by stand by? Like not trade? That would be silly. You should be creating trade plans. What do you want to do? And at what price do you want to do it? That's all there's only two sets of data on this chart, guys. Here's the time, and here's the price. So at what price would you like to, what? Are you a buyer or a seller? I don't know what you are. You have to know if you're a buyer or a seller. So Felipe says a buyer. Sweet. Great. What price would you like to buy this? Do you want to buy it high or do you want to buy it low? Low. All right, cool. I can give you, let's break this down to simple technical analysis then. By the way, it may not be today. Doesn't matter to me. It's just, I don't create, okay? Okay. Based on my analysis, you should be a buyer between 17 and 17.20. However, my analysis of these market conditions tells me it's not favorable for buying. Okay? And the reason I say between 17 and 17.20, it's actually like 17.05 and 17.19. This is Monday's buy zone. Then I said, what? Yeah, Monday's buy zone. I'm not basing this on today. Today's amateur hour. Today, what do you mean today? You have to look at this based on a day trade. There is no buy trade today. There's no buying today. There's only selling. Okay? So I'm looking at Monday, and we're in Monday's buy zone. The point that I'm trying to make now is that we have a step down by analyzing today's market. It's kind of like the weather. Like, we don't know what Monday's going to be like. Okay? We don't know what Monday's going to be like, but we're trying to analyze the weather. Well, it's been pretty nice the last 3 or 4 days. Is it going to be snowing tomorrow? Probably not, because it's not winter. Could it be raining tomorrow? Well, I don't see any clouds in the sky, but that could change, but I wouldn't suspect so. I think maybe tomorrow would either be a lot like today or a little bit cloudy. But it could rain, but it's probably not going to snow. Like, there's some reasonable probabilities. I know the past performance does not predict future results, but there is some common sense, right? So what we're looking at, Monday's buy zone is here, But we also know that looking at today's market so far is if you look at the high, the low, and we can guesstimate the close based on the close. Let's say we closed right now. Market is bearish. And you'd have to be pretty hesitant to buy a falling market. You're supposed to buy a rising market when it's low, not a falling market when it's low. So that's kind of what I'm looking at, right? Like, if you tell me that you want to buy, I know the prices right now. I can say, okay, well, if we're going to analyze this for day trading, okay, somewhere between here and here on Monday is currently, but if this falls further, right, imagine the central pivot, the high plus the low plus the close. So if the close is even lower than it is now, divided by 3, then the central pivot's going to drop even lower, and right, it might be between 1680 and 17 now. So this is adjusting in real time. Either way, what we know is the slope of the mean indicates bearish. So I, as a bull, or you as a bull, or if I was advising you as a bull, okay, I understand what you want to do here. Most likely you want dollar to weaken. I don't really care about euro. You probably want the dollar to weaken on improved macroeconomic conditions. Okay, cool. I totally understand that. Today and tomorrow is probably a bad time to buy. Because I know what the prices are. So remember the price. I know under current market conditions, or let's say, let's not look at day trading. Let's look at swing trading. Okay? This is a little more favorable, but it doesn't incorporate the fundamental change of the exogenous shock. But you see, today is Friday, right? You knew 6 days ago that this was a buy zone. So for you to just be on the clue train now is weird. Like, really? Really? You just know that now? Also, what's relevant for the future? Relevance for the future is that this did not achieve its destiny. Bulls bought here, but they didn't have the conviction to see this through. Maybe it's just, some exits due to NFP risk. Okay, I could see that. But what does it mean now with COVID? Ooh. Okay, so this data that we did, not this week, last week, we did this way back in September. We knew this was a buying price. And so the plan is we should be up here by now. We're not. So that's worrisome. Okay? The worry is the bears have real legitimate trades now. And I may have to go from a dollar bear to a dollar bull because of Trump and because of nothing else. Trump has COVID. That's the exogenous shock that could change my fundamental analysis of the US dollar. So in that case, I would be a swing trader bear next week. Okay? And this is the bearish zone. By the way, you knew this 6 weeks ago, so there's lots of trading opportunity. But let's not worry about this. Let's worry about next week. By the way, this is an old buy because I was a bull last week. That was an entry that never got in. So here's the trade plan that you have to worry about to whoever, I've forgotten now who wanted to buy the euro dollar. The real challenge you have in your face right now is this. So therefore, I would say if I were me, I don't want to buy euro dollar until we're up through this price level. So now it's the price and the time. So when will it happen? And in this case, it's not when that we're worried about, it's if. So here's the projected support 1, projected support 2. And I think bears are going to try this. I think there's a huge possibility of this next week. And therefore, your whole bullish setup, I already see its vulnerability. And mine is no, not yet, not in these conditions. How was that? Yeah, boy. Yeah. Nice, nice, nice. So wait, I'm not saying you're wrong. I'm saying the market conditions are not favorable for your particular outlook. You might have the right price. It's not the right time. Price, time. You'll see normally, guys, normally the easiest part of trading Forex is figuring out your trades. That is by far the easiest part. I mean, so much of the trading strategies are like definitional. It's not complicated at all. Like if you're a bear, look, you sell that price. What's the problem? There's no problem. The issue is the timing. Waiting for the right time, waiting for your confirmation. That's where your skill will have to get improved. But if you don't know how to trade, it ain't going to work. Forget about it. You don't know how to trade, you're not going to be successful, bro. It doesn't matter anything else. You don't know how to trade properly, it ain't going to happen. You don't understand fundamentals, you don't understand these like swing points and stuff, it ain't going to happen. Maybe you'll get lucky and you'll lose all your money slowly. Really, that's probably the worst case scenario, right? So once you have the basics, like knowing to sell here this week as a bear, that's so easy. So ridiculously easy. Okay? But waiting for the right time, having the conviction to manage your trade properly. Because you know, like if your stop is here, or if your trade is here, your stop's about here. I'm guessing. I'd have to do the calculation. But that's easy peasy lemon squeezy. Okay? The way I have this chart set up right now is only bearish. Okay? So let me go through the last few weeks. I mean, I can't see because the stupid chat is in the way. Thank you, WebEx. But this is a sell zone, this is a sell zone, this is a sell zone, this is a sell zone. Like, what's the complication, right? It's the only thing I print on my chart. It's set for bears. By the way, here's the target, right? So, great. What's the plan next week? Well, if it does this, sell that. Done. I'm done next week. Look at how easy that is. Okay? So then the next thing is your timing, the waiting, the patience, the discipline. Okay, well, you're going to have to gain that skill. Or you won't. You just won't. And again, if you don't have patience, if you don't have discipline, then you won't have execution. If you can't execute your trade plan properly, like why do most people lose their money? A, they have no idea what the hell they're doing. So therefore, there's no way that there's a plan behind what they're doing because they don't know what they're doing. So there's no plan. So once you learn how to plan your trades, what's the next problem? You can't execute your trade plans. You have no patience, no discipline, whatever. You just can't do it. You have a good plan, but you can't do it. Right? You're a great general, but you don't know how to fire your weapon. Right? So David Pegler does great webinars at FXStreet, right? He worked for me for, I don't know, 5 or 6 years, I think. And before that, he learned how to trade Forex from me, right? One of the greatest human beings you'll ever meet. But anyways, he was telling a story, and he was telling how one time he was in active combat, and they had a new like platoon officer, platoon leader, whatever, a young lieutenant, and they get ambushed. And the lieutenant's up on the 50 cal behind on the Humvee, and he doesn't even know how to load it. Like, dude, fire, man, fire! And he's like, this Jen, I don't know how to do this. Like, dude, you don't know how to fire your weapon? You're an officer, for crying out loud. Shoot, I don't know how to work a 50 cal. Oh my God, right? So other people now have to run through the firefight, bullets thrown everywhere. Get off the whole thing. Let me do it for you. Click, snap, snap. Like, right? So you don't want to be like that officer. Like, you got all this knowledge, but you have no capability. You're like, well, what's the point? Like, dude, you're the smartest guy there. You have the best college degree, but you're getting people killed. In this case, you might be killing your money. All right? So you need to have the capability of carrying out your plan, right? So that's what you need to work on. First, you need to know why the markets move, why the markets behave the way they are. If you can't understand the why, you will never predict the future. Now, I'm not saying you'll always be able to predict the future correctly, But I'm also telling you, you'll never be able to predict the future if you don't know why. It'll be a random walk down Wall Street. Right? Have you ever heard people like, oh, you can't trade in the summer. You can't trade during the holidays. You can't trade during Christmas. You can't trade the 1 minute chart. You can't. I look at these people and I'm like, yeah, you're right. You can't. I can. You can't. Okay? So you have to understand the why, and then you will have the capability of planning and preparing and ambushing. Right? That's where you plan. So you say, well, at this price and at this time, I will be there ready, willing, and able. And now you can ambush your enemy because you get there early. You take the high ground. You set up booby traps. You did everything correct. So your trade planning then sets you up, and you're like, well, at this price, I would do this. For example, there's my Monday. Will that happen on Monday? I have no idea. But if it does, I'm going to pull the trigger. And because I've prepared in advance and I have a feeling I understand why, Trump COVID. Has nothing to do with euro, has nothing to do with dollar per se. Right? And this doesn't reflect the Belgian economy. Right? This is not French trade. What is this? Trump has COVID. And if I'm right, that's going to work out and I'll make money. But you have to understand that process first. And then here's the next thing. You have to be at your charts on Sunday at 5 p.m. Eastern time. The market opens, and my whole week will probably be done within the first 20 minutes of the trading week. And other people log in New York, like, what's up, fellas? What are we doing today? What are we going to do? Are we going to buy the dollar? Are we going to sell it? What's going on? Buy the euro? Right? What do you mean, what are we doing? You don't know what you're doing? That's your problem. All right, well, wait a little while, Ann. I've never had a problem with it. I've never had a problem with it. Yeah, I honestly don't have a problem with it. Yeah, not a problem. I'm making my plan. Look, like, put it this way on, right? My weekly swings are worth 300 pips, right? If they're not worth 300 pips or more, it's not a swing. You're just day trading your way through, right? So would I pay 10 pips to get on a trade? Yeah, but you don't always have to. It happens from time to time, but it's not that big of a deal. Percentage-wise, it's nothing. And if you wait 20 minutes, it'll be 8, and another 20 minutes, it'll be 4. I mean, right? Just whatever. It's just, I don't care. I don't care. It's not a problem for me. That's right, Anthony, right? Like the leopard stalking its prey. Well, it's because the leopard sits there, watches the jaguar, and says, what an idiot. Think about that. The leopard is watching the cheetah, and he's like, what an idiot. You see that cheetah? He's talking to his buddies. Look at that cheetah over there. What's he running, 45 miles an hour? To what? He ain't going to catch that rabbit. There's no way. What an idiot. And the cheetah comes back. And he's like, dude, you must be tired, man. You haven't eaten for 3 days and you just burned all those calories. Holy smokes. Why don't you go lay in the shade of the tree? And what's the jaguar doing? He's in the tree, in the shade all day, waiting. The gazelle comes over like, what a beautiful tree. What a beautiful tree. Oh my God, there's a jaguar. Right? Yeah. So, So you're either a jaguar, a cheetah. I don't have a gazelle, or you're a slaughtered pig, right? See, this goes back to FX Bootcamp. We love joking about this. You're either a bull, a bear, or a pig. What happens to pigs? You're either a bull, a bear, or a pig. What happens to pigs? Pigs get slaughtered. Blah! See? Blah! Blah! Yeah. Yeah, boy. So get in the game. Get in the game. Right? Get in the game. If you don't know how to trade, change what you're doing. Get a mentor, get a coach, get lessons. I don't care if it's me or not. I don't care. But if you just realize you got giant gaps in your strategy, what would a successful business person do? Oh, well, I can't sell, but I got all these awesome products. Then learn how to sell or hire a salesperson. And if you can't you're great at selling, but the stuff you make is crap, then hire an engineer. Don't build a factory. There's tons of factories in China. Outsource it. Do a good job of that. But like, if you got a fundamental flaw in your business, and by the way, this should be your business. This is the greatest business in the world. There's never been a better business in the entire world. Okay? Ever. You buy and sell money. Okay? Why does a drug dealer sell drugs? So he can get money. Why doesn't he just buy and sell money? He doesn't have to go to jail anymore, right? Buying and selling money. The best business in the absolute world. You are leveraged. Okay? What else? You're mark to market. What else? Taxation is fantastic. In the UK, you don't even pay taxes on your spread betting. Wow. This is by far the best business ever created in thousands of years of human history. And you're like, yeah, I got giant gaps in this. I want to be filthy, stinking rich. I want to drive a yellow Lamborghini one day. I want to live in mansions. I want to have a yacht. I want to have a jet. Look at me. I'm in a jet. You want all this stuff. But then you're like, yeah, but I don't want to invest in my education. Really? You know how much this degree cost me? Yellow Lamborghini. And I got a second degree on the way. In the mail. Literally in the mail. How funny is that? Yellow Lamborghini, boom, 2 pieces of paper. That's what I got. So am I willing to invest money into my education, into my knowledge and my skill set? Hell yeah. Big time. Okay? Big time. I could drive around in a yellow Lamborghini and say, hey, look how awesome I am. Look how successful I am. Look how smart I am. Instead, I have 2 Harvard degrees that say that. I don't need the car. You can't lease a Harvard degree, by the way. Okay? So look at that. It only took me 60 to 80 hours a week for 5 years to get 2 degrees. That's how much I invested. Okay? Does it make me a smarter trader? Does it make me successful? Well, let's put it this way. What does it absolutely totally prove? Does it prove I'm smart? No. Does it prove I'm not an idiot? Okay, yes, I'm not an idiot. Does it prove I'm smart? Maybe. But it proves I have discipline, I have patience, I have focus, I have fortitude to study. You know how many hundreds of papers I wrote? Hundreds and hundreds of papers. And I'm an A student. Boom. Best of the best, top 10%. But you know how hard that is while working, while raising children? Okay? So the thing is, all I'm saying is, I know what it's going to take for you to be successful. I had to teach myself Forex. You don't have to do that. Okay? You don't have to teach yourself. Cool. So we can fill some of these gaps. You can learn how to trade like a business, because I'm a businessman, I always was, right? When I was 20, I was running companies of 3,000 people, right? So I'm a businessman in the world of Forex, and I know this is the best business there is because I was an investor in businesses. It's still the best. I still choose to be a Forex trader. It's so amazing, but I also know what it takes for sacrifice and investment into the future, and I know the sacrifice it takes. Do you know how many weekends I worked and how many vacations I did not go on? It's amazing how many thousands and thousands and thousands and thousands of pages that I had to read. It's incredible. I know what it takes to succeed in Forex and in other things as well. And so if anything, I can help you with the focus and the fortitude and the blood, sweat, and tears and the understanding of the sacrifices that you're making and going through, right? I'm not talking about me. I'm only saying is I know what you must go through. I'm talking about you. This isn't about me. I'm talking about you. I know what it's like. I know what you're going through. I know what you need to go through. I've been there too. I've done it, but I've not just survived, I've thrived. Not just got through, but led the way. Okay? And I can be there with you. But you must step up. Okay? You must step up. You must want it bad enough where you're like, I need to know that, and I need to know it now. Done. Commit. $382. That's what it costs to join FX Bootcamp. It used to be $1,600. Because of COVID-19, I dropped it. If you don't have $400, I can't help you. I'm sorry. There's like, at that point, right? Fundamentals, technicals, trader psychology, it's all there. Live trading group if you want that too. You gotta step up. That's it. You gotta step up. You don't have any money, I can't help you. I'm sorry. Okay? It's less than Harvard. Less than Harvard. Okay? Step up. Let me help you one more time. One more question to roll out the last 9 minutes, and then I'm going to go race some M3s. And there's a new M3 too. It's like an M3 something else. M3 something. So anyways, I'm going to play around with these beamers. Last time I went racing these cars, it was raining in Atlanta, and the tracks were all wet and stuff, and you really had to be careful in the corners. It's dry as a bone, I think, today, so whew, this is great. I'm going to tear it up. If Trump will be okay, well, yeah, if we find out he's not terribly sick and it's not a big deal and it's not changing the political cycle and stuff, like he's still going to go to, I mean, is he going to go to political rallies? Is he going to still do the speeches in person? Is he still going to campaign around the country? While sick with COVID? Is he still going to do 2 more debates? Which is ultimate, isn't it? Because remember, I said you might, so if you're in my other webinars, so if you're a client at tradersway.com, I do a free webinar every day for clients at tradersway.com. So you go to tradersway.com, open up a demo account. In the back office, there's a button that says webinars, 8 o'clock in the morning Eastern time every single weekday. Okay. So I said recently, you might hate Trump. And if you don't like Trump, like nobody loves Trump. If you like Trump, you still like him. If you hate him, you hate him even more. You're like, you hate. Nobody like kind of doesn't dislike Trump. They hate him. So you might hate Trump, but what happened during the debates? Chris, really? That's really strange. Email me, Chris. Wayne at FXBootcamp.com. Okay? One strategy you can do in scenarios like this, especially when you already have the upper hand, a sitting president has the upper hand. Okay? So now Biden has to convince, let's say, some Republicans to vote Democrat, and maybe get some more Democrats to, or let's say people that are not Republican, not Democrat, somehow vote, right? Like the middle ground. So that's what Biden needs to do. Trump doesn't need to do anything except fight the Biden strategy. And now the Biden strategy, you can see, like, clearly articulate a plan that shows you can provide America with a better outcome. Trump strategy is don't let Biden do that. That's enough. Because if you hate Trump, you still hate Trump. If you're okay with Trump, you're still okay with Trump. The middle ground didn't hear Biden say anything coherent, so actually Trump won. Now you might say, well, he was bully, he was shameful, he was embarrassing, it was a disgrace. Yeah, fine. Nobody heard anything coherent from Biden. So that's a victory. You have to understand that's a logical victory. Okay? So you might love him, you might hate him. It doesn't matter to me. It doesn't matter. I'm Canadian. I don't even get to vote. I pay more taxes. I pay 10 times more taxes than the average American. But I don't get to vote. So anyways, I try to look at this through the lenses of like strategy and game theory and such. And Biden didn't change anybody's point of view. So therefore, it's a victory for the incumbent. And Trump, I thought, hit a nerve, and I thought maybe, made a point, and I think it was a random point, but it was a good one. Joe, as a private citizen paying taxes, I followed the rules. Who created the rules? Right? Who created the rules while Trump was out building a billion-dollar empire and paying taxes every year? He followed the rules. Who created the rules? Well, for those 5 decades Trump was building, right, from the age of 20 to the age of 50, while Trump was building a personal empire, Biden was in the government the whole time. The whole time. You think of it, 50 years, 47 years in the government? Biden's never had a real job. So Biden created the rules. So like now, so he was attacking Trump on taxes and Trump's like, I just followed the rules that you created. What have you done? You haven't done anything in 47 years, Biden. So now what? And like, that was a good trap. And again, I'm not even in a political party, guys. So don't like, whatever. But like, that was a good trap. That's hard to defend. You've been in the government for 47 years, Biden, and didn't do jack. Okay? Obama tried to change the world. He needed some help. Where were you, Biden? Right? So how do you convert that to trading? When the decision is made, and we're going to end with this because I have 2.5 minutes, so we're going to end with this. When the decision is made, when the people of America, in particular the rich people with hedge fund managers working for them, when it's clear or even assumed, it doesn't even have to be clear, when it's assumed there's a victor, the stock market will rally, the US dollar will weaken. This is my humble opinion. I don't know the future, but I'm being as clear as possible. On election night, the stock market will rally, the dollar will weaken. Unless it literally does come out 50-50, and throughout the whole night, we don't know, and then it ends and it's 50-50, and now we have to talk about ballots and we need the Supreme Court. And that happened to the inventor of the internet. All right. So anyway, so we'll go back to someone's going to win, right? Like last time, remember how it was for sure Hillary was going to win and then she didn't? It was the second we realized, oh my God, she might not win this. Stock market rallied, went up 5,000 pips if you're watching things like the pound. That took a few weeks, but it did from that moment for weeks on end, rallied. They call it the Trump bump and all these different things. But the thing is, it's the removal of uncertainty. It's the certainty. So there are two certainty scenarios, and then there's the uncertain scenario. The uncertain scenario is we don't have a clear victor. We're going to have to talk about it for another couple of weeks. We're going to have to count ballots. And then when we count ballots, no one's going to believe it. So then we got to get the Supreme Court involved, and that drags out. If that happens, dollar is strong, Swiss is strong, yen is strong. Okay? You understand? Clear? Am I clear? Cool. The next thing, if we have a victor, there are two scenarios, both of which will make the stock market go up. If Trump wins, we know the Trump policies, we know the Trump staff, we know the Trump cabinet. Like the Minister of Forestry is not likely to change, right? You're like, who's the Ministry of Forestry? I don't know. Who runs FEMA? I don't know. But whoever does will probably continue to do so. We know all these things. We have certainty. And in fact, you might not like the Trump policies, but you know how to make money under Trump. If not, you went broke long ago. Okay? And so now we know, like, okay, maybe there's another trade war, maybe there's this, maybe there's that, maybe there's whatever. But we know how to make money, and all the roadblocks and the risk of the unknowns go away. And now we just have another 4 years. We know how to make money, and the stock market's going to rally hot and fast. Another Trump bump. Scenario number 2, Biden wins, and we go, oh my God, that's horrible. Oh, wait, it's not that horrible. He used to work for Obama. Obama wasn't that long ago. I know how to make money under Obama. I don't really like it. It did this and did that. We're wishy-washy on this and that, but I know how to make money on that. The stock market went up. Okay, good. So we know how to handle that. And is Obama radical compared to Obama? Or no, if anything, he's Obama light. So he's going to be a lot like Obama and stuff. So, okay, that's not the end of the world. It's not Elizabeth Warren. Biden's not going after Wall Street and closing down trading and all that kind of stuff. He probably just is going to do a whole lot of nothing. Okay, we know how to make money under a scenario like that. Cool. But we don't know who's in the cabinet. We don't know who's going to be Secretary of the Treasury and all this kind of stuff. So, oh, right, okay, and okay. We don't know these things, but we can guess, kind of like Obama. So it will still rally because we know how to make money under the Obama administration. And we know Obama was great. I still don't know anything about Biden. I know Obama was an amazing orator. When Biden does speak, I don't hear anything coherent. So again, I'm not talking about this political point of view. I'm just not sure what he, like, I don't know. Like, so anyway, so I can't imagine anything radical going on anywhere, right? So if that happens, we know how to carry that through and make money. So under that scenario, the market will rally more like, okay, we don't know what's coming up, but it's not that big of a deal. I don't think it ends up with a big stock market crash. I think it goes up and we're like, okay, we'll figure it out as we go. We've been through this before. We'll figure it out. No big deal. And there's my, I hope, clear and coherent point of view on what will happen election night. Okay? So, thank you for being here. Thank you, FXStreet. This has been Trade Non-Farm Payrolls Live, month 174 in a row. 14.7 years I've been doing this one webinar. Okay, so I hope you enjoyed it. I hope you liked it. I hope you tell your friends. I hope you tell FXStreet. Okay. It's a shame that there wasn't 1,000 people in the room. Honestly, like what's going on? So help me help you and help me help other people. Okay. And honestly, if there was anything that was helpful today, I hope you follow through, join FX Bootcamp, become a member, and get serious and get onto the right track. It's time to get serious about the rest of your life. Today is the first day of the rest of your life. So time to girl up. Put your big girl panties on and let's move. So peace on earth. May the pips be with you. May your profits be above average. And maybe I'll see you soon. If not, I'll see you in a month. Cheers. Thank you, moderator, for moderating. Best moderator of all moderators. Thank you, moderator. I appreciate it. I know it's late for you. I know it's a weekend. So thank you for sticking around. Peace on earth. May the pips be with you. May our profits be above average.